This is the wrap-up for the live market open for Wednesday, February 17th. We had a change in mood in markets. The mood has become a bit more negative. Markets don't buy the announcement about the freeze in production from Russia and from Saudi Arabia. Oil prices did fall. Stock markets in the US got stuck, and in Asia, they began falling. Okay, another thing that dampens the mood is that China devalued the yuan just a bit, but there are worries once again about China. The mood in general is worse. When the mood is worse, what do we have in markets? Stronger euro, stronger yen, more pronounced in recent days. The euro is still suffering just a bit from Draghi. So the yen, dollar yen fell from the highs near 115, support 113.20 to 114.25 is the current range in dollar yen. The yen is still the ultimate safe haven currency, even if the Bank of Japan intervened last week and is ready to intervene once again. The yen remains strong in times of trouble. Euro, small reaction here, currently around 111.60, much narrower range in comparison to previous days. 112 to 111.20 is the current range. Support, very strong support at 110.70. Okay, the pound already had much more volatility, suffered a huge downfall, a slight miss on inflation, compounded with previous comments by McCafferty earlier in the week. We had a big fall, break below support at 143.65, further support at 142.30. Big event today for the pound. The jobs report, most important part of that report is the wages. The average hourly earnings, I would say including bonuses, expected to tick down from 2 to 1.9. Also note the claimant count change and the unemployment rate, but wages are the most important. Okay, below 142.30 we have 141.25 we have a really terrible report, or 143.65 and 144.50 on the top side. Dollar CAD moving by oil prices. 138.87 remains resistance. Is support. 137.87, resistance 139.10. We already reached lower levels, further lines 140, 137.20. Aussie dollar back to the lower range, back under 71, 71.40, some kind of resistance. 70.80, 70.40, and 70 are lines of support. Big night for Australia with the jobs report. In the past three events, it was positive. This time, we're expecting another rise of 15,000 jobs. And also the Chinese inflation report is also impactful. The Kiwi dollar is on the back foot, struggling with the previous support line of 65.80. It was hit for the fourth time this week, this time by milk prices, which disappointed. Earlier in the week, we had disappointing inflation expectations, retail sales, and a negative comment by the Prime Minister over there. Okay, other events we had yesterday, not worth mentioning. So today, the big event for the morning is the UK jobs report. Can move sterling across the board, euro, pound, yen, and you name it, are expected to move. Of course, cable, mentioned that. We have lots of data from the United States, housing starts, building permits, and producer price index. They could move the market only a bit because, first of all, they could come out mixed. One figure goes up above expectations, the other below. Okay, so it could be a big mess. And also we're expecting the meeting minutes. So we have housing starts, building permits, and PPI, producer price index, at the same time. 45 minutes, industrial output, which will probably be bad. And at 7 GMT, the main event for the day, the Fed meeting minutes. On one hand, it's 3 weeks old. On the other hand, it's revised until the last moment. And again, on the other hand, we have, on the positive side, we have growing employment and recently some positive figures in the United States. The negative is, of course, the Fed likes to blame China. And of course, inflation is not going anywhere fast. If we have hawkish minutes, and I have a small bias towards hawkish minutes, it's negative for markets, good for the euro, good for the yen, bad for all the rest. If we have the Fed standing alongside markets providing full support. Then we have, of course, a rally in commodity markets, in commodity currencies. Let's see how this develops. The Fed usually, they try to make things very, very balanced. Okay. And yeah, I mentioned the Australian jobs report and the Chinese inflation data. So I guess that's it for today. We have